Of course, yes. Thank you so much for having me. It's an honor to be here and be able to share some of the knowledge and insights that we get from the Web3 space with everyone. So do you want to, I will start sharing.
Yep, you can start sharing.
All right. Everyone should be able to see what I got going on.
Yes, it looks good.
Let me just open up chat as well so I can see anything that comes in. All right. So today, what I'd like to cover is Web3 for large brands. And this is a pretty interesting topic because, there's a lot of noise and, information in the space that is that is good and great, but what I want to kind of like give some feedback and insights into today is what we're seeing on why like large brands and large enterprises are starting to push into the space. I myself, as Setu said, I'm the director of blockchain at Gigster. So we work with a lot of large enterprise clients to help direct them with Web3 strategy. I myself have been in blockchain since about 2015, early 2015, and have had fingers in the space ever since then. But when we're thinking really about, Web3 for large brands, how we typically like to move through this and think through it is just to kind of like lay a little bit of groundwork, kind of understand the difference in Web3. And that term gets thrown around a lot, like Web3, metaverse, this, that. But to provide some like baseline context and understanding so that we're all on the same page, and then talk about why we're seeing a lot of traction and like what NFTs really are. Some of you may already know, but for those that don't, we'll just cover a little bit of info on that. And that sets us up really well to talk about like why enterprise are interested in this. I was talking to enterprises in 2015 saying, you guys should do blockchain. And everyone's like, maybe not yet. And then, circa 2021, the Cambrian explosion of NFTs happened. And since then, the adoption curve has been just up and to the right like crazy. And then from there, we'll move into like what are typical strategies and ways that we're seeing these large brands move into the space. What's the kind of approach that they take into adopting it? And, my hope is that when everyone leaves here or leaves this talk, you can have some more kind of like tangible business objectives and reasons why blockchain. Everyone talks about the tech, but I think that there's a bit that gets lost into the why it's so important and why businesses and companies are looking at it. The industry itself has been growing like crazy, right? Like, for anyone that, comes to any of this speculative of is this here to stay? Is blockchain going to be here for a while? The facts and figures say yes. We are moving at this extremely fast. The growth year over year has been like nothing we've ever seen before. I was fortunate to be around the early days of AI and ML and, early days of like mobile, BYOD, enterprise, mobility, IoT, all of that. And I've never seen any new tech take over and take markets by storm like blockchain and Web3 has. But we say Web3, like, what are we talking about, right? So when you hear Web3 out there, really what people are referencing is this kind of next evolution of the web, right? So Web 1 was the very early days where everything was very static in that, content creators and websites were all, they created the content and then you as a consumer consumed it, right? You weren't really providing anything back. You were just kind of watching what was going on. That evolved into kind of where we somewhat kind of bleed into today, which is Web 2. And this is really the idea of like the creator economy, right? And that the web itself was a platform for people to actually create on. So people started creating their own websites. They started putting out their own blog posts. Social media came around, and really the majority of content on the web is user generated. And it was a huge paradigm shift, opened up a lot of doors for new business. And now we're on this cusp and this precipice into the evolution of Web3, right? So Web 2, a lot of these platforms are all centralized. You can think of this as your your Instagrams, your TikToks, your mediums, your blog sites, your message forums, they're all owned by centralized, entities, and they manage that and they monetize on top of it. Web3 is this idea of moving away from having centralized entities that own this to this more idea of decentralization and openness and transparency. And that is really this concept of Web3 and where we're moving at. And all of this gets underpinned, really by blockchain and by the different protocols that live on top of it, like NFTs, like DAOs, like crypto. This idea of individual ownership of digital assets is all underpinned by blockchain. And I think it's really important now to like level set and say, well, like, okay, but like, we might know tangentially and kind of abstractly what blockchain is, but to kind of like break it down just for everyone here, just to kind of understand, is that, blockchain gets described as a, this digitally distributed, decentralized public ledger that exists across the network, right? A bit of a mouthful. And this is, I'm sure everyone's heard of Bitcoin and Ethereum. But if we take this and kind of break it down, right, it's really simple, is that, if we look at it, so it's a ledger, right? So it's like a database, right? So it's a ledger of where events and items are recorded. It's decentralized, meaning that information in that database is replicated across a lot of different instances of it. And it exists across the network, meaning that they are all connected, right? So it's not as scary or like crazy abstract as you might think it is. It's actually at its core like pretty simple. And this is, again, at a very high level. I'm sure that people will say that it's way more than that. You got consensus mechanisms and all kinds of other jazz, but really that's what it is. And if we approach this and look at it from a bit of your traditional web architecture thing, the blockchain is, kind of that infrastructure, that database for record keeping layer. And this is stuff like your Bitcoins and your polygons and your layer ones and layer twos. When you hear all of that, you can think about it at the bottom. On top of that, what we have is called protocols. And protocols is like an NFT protocol, right? And your cryptocurrency. And this is where you get, NFTs like your Bored Apes, or your cryptos like your Shiba Inus. And then the interesting, part that we're at now is that on top of these protocols, we start to build applications and like use cases of this. And this is stuff like DAOs or NFT marketplaces or exchanges, your DeFi stuff. And this is where you start to see like OpenSea, for instance, kind of sits on top of all of this. And so when you're a large brand, right, this is super helpful, especially as you're trying to understand the market and understand like the tech that's underneath it. Because when we talk to a lot of them, it's not that they're scared. It's just hesitancy, as any large brand and enterprise would have moving into any form of emerging tech. And when they look at it, and when we kind of like slice it, you can really, and again, the lens of all of this is looking at it from a business perspective, is that you can look at Web3 from mainly two different categories. The customer innovation side is, how do you create new experiences and new products and new ways to engage your customers? And this is like your, like what, Adidas and Nike are doing with their shoes and their art installation drops and stuff like that. And then the other side of the coin is really leveraging Web3 for internal innovation. And this is things to help streamline your business, maybe help like optimize, transactions and things with partners or other players in the space. Supply chain is a big one that, has had a lot of use cases for Web3 and blockchain put against it. And again, as I continue on, I'm going to start using a lot of like Web3, like instead of just blockchain, because Web3 itself encompasses blockchain and a lot of other topics. So Web3 gets kind of split into this, for the purposes of this, this presentation, what I'd like to dive into and kind of focus on a little bit more is this idea of like the customer innovation side. So why are brands now calling and asking about Web3, whereas 2 years ago, it might have been on their radar, like maybe on there for like a innovation team, but not really part of their core strategy or like go-to-market planning for the future. And a lot of this usually starts out and gets underpinned, and a lot of things that push the market in this direction were NFTs, right? And for people on here may or may not know or have a lot of deep experience, but to just kind of, again, level set on what NFTs are and like why they are so important to the space, and had this technology push the market so fast and so quickly, unlike the other things did. And at the end of the day, it's super simple, right? So NFTs are non-fungible tokens, and that's kind of hard to grasp around. But if you think about it really easily, it's that things that are fungible means that they are identical copies of all the other instances that exist in the world. So in this case, right, a US dollar bill is worth $1, and you can give me one, I can give you one, we can change them in and out. It doesn't, like, they're not unique. Non-fungible, though, is where you have an asset or an item that is specifically verifiable and identifiable as being unique. So in this case, the example is like a penny. So just your normal penny would be worth 1 cent. However, if you have a 1943 copper wheat penny, it's not worth 1 cent. It's worth upwards of $60,000, right? Because it's unique, because you can't trade it for something else. It's verifiable. It is scarce. That enables it to drive value. But what makes it non-fungible is that that penny is not the same. It is not created equal as all the other pennies out there. And that's like this very cool shift and enablement that NFTs brought, is that before NFTs on the internet was founded on this idea of copy and pasting and sharing, and like everything is just out there for consumption. But where we're at now and what we've seen is the amount of like revenue and monetization that can happen in the digital world, that being able to provide provenance and show that something is unique, that is a digital asset, is really kind of saving the internet from itself. And that's why NFTs came on by storm. And that's why we've seen so much investment and money around. Like, I'm sure you've seen the $200,000+ Bored Apes or the CryptoPunks and things like that. And it's helped do some amazing stuff for Web3 as a tech and as an adoption overall. The first NFT, I get asked this a lot. Well, like, so Cory, what was the first one, right? There's some dispute, but like arguably a lot of people say that this is the first NFT ever created back in 2014. And what's super interesting about this is that this NFT was recently sold for almost $1.5 million. And what's interesting to see about this is that this is Sotheby's, right? Like one of the largest and most historic auction houses on the planet is now selling digital assets. And that provides such a validity to the space and like what we're doing, that it's really, really important to see this, especially for businesses that like, look, this is legit. There is real traction and things going on here. But everyone says, Cory, you can just copy and paste it. Like, you can just copy and paste it, right? Like, so why does it have value, right? And this is the interesting, like, psychological part, is that this happens in physical stuff all the time. It's no different with JPEGs or with images online. I can go to the Louvre and go look at the Mona Lisa, but I can also walk to the gift shop and buy a replica print of it and put it in a frame and put it on my wall. It's just the same, right? The difference is that everyone can verify that the Mona Lisa at the Louvre is the original and therefore has a priceless thing to it, right? And that's the same with NFTs. You know, yes, you can copy and paste it. However, the public and everyone can verify, thanks to the public ledger that is blockchain, and say like, yes, Cory owns that, or yes, someone else owns that. And therefore that one is the original and therefore has a higher level of value than any of the copying pasting that goes on. And it's not, it may seem weird or feel like an odd motion, but at the end of the day, it is what we kind of do subconsciously in the physical world already. You know, NFTs themselves, like, this is kind of an interesting thing that a lot of people don't understand as well, is that, you know, really what you're owning, and when you have an NFT, is you're owning that provenance, you're owning that record that shows that you own it, right? And you can show that chain of custody that went from person A to person B, and now you as person C have this, and that ability to track that provenance is what, again, provides the value and provides the proof that you are the owner of it and that this is the original underlying asset. And so this is always a fun thing to do, is that everyone can put their programmer hats on for a second. And then I get asked a lot, but like, what do NFTs look like? Like, what is the code behind it? And this is an example of one. So this is for NBA Top Shot. If you haven't heard of it, it's probably arguably one of the most successful NFT marketplaces on the planet. Over $1 billion in transactions over with just a year. And this is like what they call them moments, but like NFTs on their platform, like as code, like looks like. And on the right's an example of what a moment is. But at the end of the day, like it's not super crazy tech, right? Like this isn't anything that's wildly complicated. So to be in any way like apprehensive or nervous or confused, like it's not rocket science. But this is always fun to do because we get to play programmer for a minute. But, you know, to round this out, is at the end of the day, like NFTs, if anyone asks or comes to yours, like, so why do NFTs have value? Or like, why should I, like, as a business, like why should I create NFTs? Like, how are they going to hold any water, right? It comes down to three things, right? It's that you can verify the origin, right? So just like the Mona Lisa, we can verify that that's the original because we can track the origin from when it was created to where it is now. You can do that with NFTs. Ownership, so you can publicly verify, right? You're not leaning on any centralized entity to say that yes, Cory or yes, John owns that item. The public, anyone can go to the blockchain and look at that and say, yes, that person owns it. Therefore, we can validate that is the owner by proving the origin path to them. So you can show that it changed hands from person A to person B and now person C. So yes, they're the owner of it. And last is around this concept of integrity, right? And the big thing is that people will try, and this is human nature, to copy and paste and scam their way to riches. And being able to verify that the asset that you own or that you're buying is the original is incredibly, incredibly important. And, you know, blockchain and NFTs are able to do this through this function called hashing, which essentially is able to verify if the data or the image, like the Bored Ape picture that's with the NFT, is the original or not. And I won't go too deep in that, but there's basically these three reasons, right? We can track where it came from. We know now based on that who is the current owner, and therefore can validate that it's real. And last, we can also validate that the actual item is authentic, and that provides the basis for intrinsic value that gets added to assets, not just digital but also physical. But why is this interesting, right? And like, why is this interesting to businesses? Like, why when I go talk to them, or why when they come to me now and ask, like, Cory, NFTs, like, you know, what is the interest behind it? And, you know, again, the big thing is that it's understanding that, like, this is a real market, right? Like, this isn't fly by night. This isn't, you know, just some nascent tech that sprung up and is getting pumped way out of proportion. You know, the market and the investment going into it is there. You've got major brands, you know, you've got Coca-Cola and Gucci and Budweiser and the NFL and NBA and Ferrari, Formula One, major soccer sports teams or football teams getting into the space and having great success because of really that we see like 4 reasons. And, you know, these 4 reasons are not by means any and all, but this is a lot of the 4 reasons why we see enterprises and large businesses or brands or IP holders getting into the Web3 space. And specifically, we see a lot of them moving in via NFTs. And the first one is obvious. Like, every business knows, like, your market is everyone. Time is time. Everyone's getting older constantly. And so, you know, depending on how your target market is, they will age out and you'll have new ones coming in. And NFTs allow you to engage with that younger demographic and new audiences like you couldn't have before. The other really cool portion is that Web3 and what we've seen from NFTs is that it allows you to create these incredible new experiences for your customers. And if you're a brand or a producer that typically does physical goods, being able to offer your same value prop or also be able to offer products in the digital and Web3 and Metaverse space in the future is critical to any like business roadmap, right? And being able to stay on the edge of technology and stay with where the market trends and everything are going. You know, the third one is that obviously companies companies exist to turn a profit. And NFTs offer a incredible new revenue stream that's incredibly high margin. And so a lot of them are attracted to that. And the final one is around this concept of like brand control and risk containment. Now, what does that mean? Is that the Web3 space is the Wild West. It really is, right? Like there's a lot of, I mean, it's completely public and decentralized. So no one's really figured out like what regulation means in Web3. And it's one of those instances where whoever is first, or he or she who is loudest, is able to grab and make moves, right? And an example of this is that there's nothing substantially stopping me from going and creating a Nike NFT and selling it. Like there's really not, right? What does stop people from buying it, however, is that Nike has and Adidas has a Web3 presence, and they've basically come out and stuck their flag in the ground and said, this is Nike, this is Nike, or this is Adidas Web3 space. This is the credible source. Only buy from this shop. Like if you go anywhere else, it's a fake. Don't go there, right? And this is how Web3 world is like combating knockoffs and like a lot of the shit coming in that's like out of a brand's control, right? And so we see, and we urge a lot of brands to get in now to help put that flag in the ground so that their customers don't get scammed, they don't get rug pulled by the malicious actors and evil people that be. And as brands move through their Web3 journey, like there's a lot of stuff that's out there, but this is kind of a typical adoption path, right? They start with NFTs as their first kind of footprint into Web3. They move into this idea of accepting and supporting crypto from not just like selling and purchasing products, but maybe even offering employees payment as crypto. And the big thing with all of this is that the goal for any of this strategy and doing early NFT stuff, offering new projects and new things, is that you have to educate and set up your customer base to be successful when the metaverse shift happens, right? And a lot of people will define the metaverse differently. Some people think it's Mark Zuckerberg and Facebook's like VR goggles, and we're all just like laying back in chairs. My definition of the metaverse, however, is when over 51% of the global population has over 51% of their net assets and net worth in digital assets rather than physical. And that is a pretty compelling thing to like try to think through. Like imagine a world where everyone, like the majority, like over half of the world's value is held in digital assets and not physical ones. Like that is the metaverse like shift in my mind. And the strategy and the reason for companies to get in now is that you have to educate and you have to help get your clients along so that when that shift happens, you're not left in the dust. And there's a great line, that businesses go out of, like companies go out of business very slowly and then extremely fast, right? And it's usually a going out of business and then boom. And that sharp drops happens because there's some fundamental shift or some change in technology that they weren't prepared for, and they didn't prepare their customers for, that when it happened, they couldn't adapt quickly enough, and then boom, they're gone. And that's why we're looking to get in early. That's why we push people to look and be interested in this tech now, especially again, from the large brand, the IP stakeholder side. It's incredibly, incredibly important. Not just for the upside that they get and that you get now, but also thinking 3 to 5 years down the road. And so when we look at this adoption path, there's kind of this general progression that we see. And this is obviously very like unique per business, but if I tried to take and say, all right, like what is, like if we were to take the average of what a lot of them were doing, it's really this kind of phase-based approach. And it's starting small and then growing the value and growing those use cases over time. And a lot of times that first entrance in and that first spot is around this idea of doing the primary drops or a direct to consumer sale, where basically your business is able to create NFTs and sell them directly to your customers. From there, you take that and you start to grow and create this incremental value on top of it over time. The next step being potentially a peer-to-peer marketplace, and then moving into all kinds of different things. The interesting thing to think about this, though, and this is what's so much different about working and building in Web3 in the future, is that traditional consumer economies that we all live and operate in today is that products are designed to fail, right? Physical products have a life, like a shelf life. You can use them for a certain amount of time, but eventually they will give out and then you will buy a new one. They degrade due to time, weathering, use, any of those different factors. The difference is that when you're creating products in Web3, they don't degrade, they don't have wear and tear, and that they are around forever. So if you're a business thinking about creating these, or when you start and when you will start creating these, shifting that like product mindset into, I'm creating and offering a product that's a foundation and it's a starting point for a customer. And over the lifetime of this customer, I'm going to continuously add value on that underlying asset. And that is what the products that I'm going to offer are. It's not about offering, something, a pen that's going to run out of ink and then they're going to come back and buy more. It's that I'm offering a pen that, as this person uses this pen over time, it's going to have like different value. Like I'm going to offer different enhancements to it, or different value add that keeps them holding that certain asset. And that's how we like to think and direct people when they're thinking about the future of the roadmap and how they do in Web3 in the future. It's that's the mindset that you have to have. But it usually always does start with this kind of first phase. And again, the direct to consumer drops, these are great to start with, especially if you're a brand or business getting into this, because it helps you solve a lot of like early tactical problems that you need. And it's not problems, but tactical items that you need to check out. And that's things like, early on, you need to get like I think a lot of people may have heard like your DNS records. So like your yada.com records. We have similar stuff like that in Web3. They're called ENS records, but it's getting stuff like that set up, like getting any domains that you want to have ready for Web3, whether that be your business name .com/NFT or your business name NFT. Securing. So, I mean, this is like a lot of like basic stuff, but just getting ahead of this is going to make things a lot easier for you. And, there's also this other area of like explorative things that you as a business can start to do early on that will help set you up. And this is thinking about you as a company, like how can you transition your value prop and offering that you currently provide, whether that be, either through physical product production, maybe through some form of like managed service or something of that. And how can you add digital assets to increase the value of what you bring to market? And building out the community is one of the most important things in Web3 that I can't emphasize enough. But thinking about how you help grow the community, and this is like usually your existing customer base. And the other fascinating thing that's slightly tangential to this, but I will bring up because I think it's super, super interesting, is that so the latest poll of numbers that I did was that in the past 30 days, and this wasn't this past 30 days, but when I had pulled them, was that out of the $2.6 billion in transactions, just in NFTs, not crypto, not Bitcoin, not ETH, but just in NFTs, out of the $2.6 billion in transactions, only $300 million of that was primary sales, meaning that only $300 million of $2.6 billion was companies creating an NFT and selling it. That means that $2.3 billion was done in secondary market transactions. Now, if you think about that, that means that over 80%, I think, I'm not sure the percentage, but a vast majority of the interactions in trading happen peer-to-peer, meaning it happened from customer to customer. And that, from a brand perspective, saying that I can create collisions between my customers and my install base in ways that I've never been able to do before. And this helps drive brand value and drive engagement from my existing users. Is a incredibly new and extremely powerful tool to have and to be able to leverage and grow. Traditionally, as I said before, in like the consumer economy and a lot of the brands and things that we interact with today, it's very like one way, right? Like the brand creates content or creates products and they go directly to you, you consume them. And it's this very like tunnel vision. There's not a lot of like horizontal collisions happening between you and other consumers of the brand. But when you do create those horizontal collisions, you start to build community, you start to strengthen the bonds as a whole of the people buying your products and interacting with you as a business. And that has extremely high upside. We've never been able to do that like we can now, leveraging Web3 and specifically in this context of using NFTs. So that's the majority of it. Where I've got to do like a small plug, so I'm sorry, but at the end of the day, like where we lead and where we partner is that, so we're the leading SI for blockchains. We build a ton of different projects all across the board, from NFT marketplaces to core infrastructure. We've got a lot of value props. We work with some of the biggest brands in the world, which is really cool. But that is, I think, my presentation. So I hope that was very helpful and that it was on topic for what we were looking to talk about.